Hey everybody, welcome to Trading Capital's exclusive analysis. We're going to be discussing gold, silver, and the GDX, the gold miners. So what's interesting about gold is since it made that new all-time highs in the futures on that light volume, short squeeze, boom, and then collapse, short triggering there, it has just really trended lower. Gold is now below 1981. So massive, massive full round trip in gold. I mean, if you take the high down to this low move, that's about a 7% down move in the gold market. What's interesting is I think going to enter a part where I think we're going to see a capital rotate out of the equity stock market back into the precious metals like gold and silver. Gold right now is close to buying some, just nibbling on some on the long side, but I refrained because we have CPI tomorrow. But this is now retracing. You can clearly see on the long-term chart, there's actually a couple channels, this larger channel and then this little bit of a intraday smaller channel. We've now retraced to the larger channel and got to close back outside the channel. We've also closed back underneath this downsloping trend line. That was your breakout level. So this does leave some potential vulnerabilities in the gold price action, but believe it or not, we are at support. If you take this low to the high and you throw in a fib retrace, we stopped right at the 50% retrace. I'll actually show you that fib retrace on the chart. So the high to the low, we're now at the 50% retrace, that 1979 area with this support pivot, this prior consolidation should act as a near-term support. Whether or not we get a bounce, we probably get a little bit of a multi-day bounce off this area, but the dollar is looking like it wants to trend a bit higher and firm up. Obviously, CPI is going to be the big kicker, but watch the gold price action because anything below this 1940, I do think it starts to open up a massive opportunity to accumulate on the long side again as we head into the as we head into the new year. So I'm looking at two accumulation points on gold. Basically, I'm looking at this first 1940 618 fib. Even though I was tempted here, you may get a couple day bounce, but it's not quite the swing trade level yet. And then I'm looking at the low end of this channel. If we can get basically back to these two pivot zones, the 1940 618, and then the low end of the channel, that's where I'll start building a position in. And then finally, if for some miraculous reason gold wants to retest 1811, we would also accumulate there. So I'm watching that ever so closely, but definitely interesting to see that the gold market is so vulnerable at this point in time. GDX is interesting too because you did have that original inverse head and shoulders on the miners, the gold miners. Gold miners have had every reason to propel higher with the weak oil price and one of their biggest input costs falling, but you're starting to lose this. You technically got a close below this lower boundary trend line, which in theory, if you're following true technical theory, it actually negates this inverse head and shoulders. So the fact that this pattern, this inverse has now failed, it actually negates it, which leads me to think that this head and shoulders pattern, since you got a retrace to the neckline and it held, could see more downside in the GDX, which would mean a couple things. One, could see the equity markets in for some sell side pressure. Two, we could see higher oil prices, which would put pressure on miners because it is their biggest input cost. And three, we also could see some lower price action in gold with a stronger dollar. So all three technical aspects are kind of aligning with my dollar theory, with my price action in oil, where we should see a small little sell off to basically a 5 to 6% bounce in oil. So I think that the miners certainly have some headwinds now, and just based off of technicals, it now has closed below this inverse head and shoulders neckline. I was giving it quite a bit of leeway here, where you had this as your main top flat bottom neckline, but then I even lowered it to connect to more pivots, and we even got a daily close below that level, which is making me slightly a little more bearish on the underlying commodity, even though I do like it long term. Silver's another thing. If the economy does start to weaken, silver's going to get hit twice as fast, twice as hard. Look at this sell on silver. Silver is coming up into this previous channel over here. You know, you can argue that silver has a trend line going basically back to here that you're coming up into. Whether or not it holds, time will tell, but silver is probably only going to bounce if gold gets a bounce. But silver tried breaking out here and had that epic reversal candle, bearish reversal, and it's just bled since. 1, 2, 3, 4, 5, 6 days down in silver into the support trend line. This should yield a little bit of a bounce. If you gap below this tomorrow, if this opens negative, I think silver could be bought for a little bit of a potential reversal, pending that CPI and what that dollar does. If that dollar continues to break out and spike, I would not get in front of this, but it is looking nice for a potential trade, a day trade at the very least. If you like this video, please give a comment below and like my video. Are you buying gold at any point? Are you buying silver at any point? Or are they relics, like the old Warren Buffett says? But needless to say, I think there's a lot of interesting things that are unfolding in the market. So please be cognizant that there's a lot of moving parts, from bond auctions tomorrow to CPI, PPI data to an FOMC Fed rate hike decision. Lots to discuss. Take care, everybody. Please give this video a big like and visit my tradingcapital.ca website.